Alright, let's be honest. How many times have you pulled up a Toronto real estate listing, saw the price and thought, wait, who's actually affording this right now? Because if you're like most people, the math just doesn't make sense anymore. Every month we hear the same headlines, prices are up again, or affordability crisis hits new highs. But what does this actually mean for you? In this video, I'm walking you through what homes in Toronto actually cost right now, how much income you need to buy one, all the upfront and monthly costs people forget about, and finally the upcoming July 30th Bank of Canada announcement and why that might actually be a rare window of opportunity. Whether you're thinking about buying soon or just trying to figure out if you should buy right now, this video is here to help you get clarity, because sometimes we feel pressured to jump in just because others are buying, or sit on the sidelines just because others are also waiting. This video is meant to help you make a decision that's not based on anyone else's opinion or situation, but a plan that works for you. As of July 2025, the average home price across the Greater Toronto Area is sitting at $1.1 million. But that number includes everything: condos, townhouses, semi-detached homes, and detached homes. Here's the full breakdown. Detached homes are just over $1.64 million. Semis are around $1.28 million. Townhouses are about $957,000, and condos are about $731,000 on average. So even the so-called starter condo is now well over $700,000. Now, here's a common mistake that a lot of first-time buyers make. They think the minimum 5% down payment applies to the entire purchase price, but it doesn't. You only pay 5% on the first $500,000. Anything over that, you need 10%. So for a $731,000 condo, 5% of the first $500,000 is $25,000. 10% of the remaining $231,000 is $23,100. That means you're looking at a minimum down payment of just over $48,000. Let me know in the comments, did you already know how the down payment scale works, or did this catch you off guard? Now, outside of your down payment, you've still got some other upfront closing costs. CMHC insurance, this is added to your mortgage if you're putting down less than 20%. It's usually around 3 to 4% of your mortgage balance. Land transfer tax, you pay a provincial tax, and if you're buying in Toronto, you also pay a municipal tax. On a $731,000 condo, you're looking at about $20,000 total. But first-time home buyers can get rebates of up to $8,475. Legal fees, expect to pay about $1,500 to $2,000 for your lawyer to handle the closing. Home inspection, it's about $500 for a condo. Some buyers skip this, but I recommend it, especially if you're buying in an older building. And then there's closing adjustments. You might have to reimburse the seller for things like prepaid taxes or condo fees. This can be a few $100s or even a couple of thousands of dollars at closing. So all in, you're likely looking at over $60,000 up front before you even get the keys. Okay, so let's say you've saved that down payment. What kind of income would you need to qualify? If you put down $48,000 on a $731,000 condo, your mortgage would be around $683,000. Add in the CMHC insurance, it becomes roughly $708,000 total. At a 5.5% interest rate with a 30-year amortization, your monthly mortgage payment would be about $4,000. Now add in property taxes, around $400 a month, condo fees about $600, and utilities and insurance roughly $150 to $250 a month. That brings your total monthly cost to somewhere between $5,100 to $5,200 a month. Based on how lenders calculate affordability, that means you would need a household income of roughly $159,000 to $162,000 a year. Let me know in the comments if that number surprises you. Let's break down the monthlies one more time. Mortgage, $4,017. Taxes, $400. Condo fees, $600. Utilities, up to $250. And when you put all of this into perspective, this helps explain something we're seeing in the market right now. There are over 10,500 active condo listings across the GTA, and nearly 7,000 of those are in the city of Toronto alone. And a lot of buyers just can't swing the monthly costs anymore, and a lot of investors are choosing to sell instead of renewing mortgages at today's higher interest rates. So if you're in a condo right now, or you live around a bunch of them, and you're noticing more listings, that's probably why. Let me know in the comments if that's what you're seeing. Okay, now let's talk about interest rates for a second. The next Bank of Canada announcement is coming on July 30th, and both Scotiabank and RBC are now forecasting that we won't see another rate drop until sometime in 2026. That might sound like bad news, but it could actually be an opportunity if you're a buyer. Here's why. 1, there's less competition. 2, you've got more negotiating power. And 3, if you buy now and rate drops later, you can always refinance at a lower rate. So no, rates aren't great right now, but the market right now is giving you more flexibility than we've seen in years. So how are people still buying in 2025? For a lot of first-time buyers, family help is actually part of the big picture. Whether it's a gifted down down payment or a parent co-signing, the bank of mom and dad is still wide open. Another strategy that's becoming more common is co-ownership. Friends or siblings team up to buy together and then they split all of the costs. Some buyers are moving further out to places like Durham, Halton, or Simcoe, where those homes are more affordable and hybrid work makes the commute manageable. Pre-construction development is also a big one. Instead of putting everything down at once, you often make smaller payments over a couple of years. And this year, first-time buyers of new construction can now get a full GST rebate up to 5% of the purchase price. That's up to $37,500 in savings on that $750,000 unit. People are also using tax tools like the first-time home savings account and RRSP home buyers plan to access over $50,000 in tax-free down payment money. And some buyers are starting smaller with studios or micro condos just to get into the market and build equity. Have you looked into co-buying or pre-construction lately? Or maybe the new GST rebate? Let me know in the comments, how are you approaching the market right now? Buying in Toronto isn't easy, but it's not impossible either. We talked about how the average GTA home price is just over $1.1 million. The average condo is $731,000. You'll need at least $60,000 up front and about $5,200 per month in carrying costs. That means you're looking at needing a household income of at least $159,000 to qualify. And with that July 30th Bank of Canada update on the horizon and no more rate cuts likely until 2026, the numbers probably aren't going to get easier anytime soon. But this could still be a good moment to buy if you're ready. There's less competition, prices have stayed relatively stable, and refinancing later is always a possibility. At the end of the day, it's about having a plan that works for you. Not your friend, not your neighbor, not what some headline says, just you, your numbers, and your level of comfort. If this video helps you out and you learned something new, hit subscribe. New videos are coming out all the time. My name is Fred Tam. I'm a real estate broker in Toronto. I make these videos to give you the best real estate tips to help you reach your real estate goals. Thanks for watching, and I'll see you in the next one.